This is the TrendTrader.com. It's Franz again. Welcome back to another weekly recap looking at trends in major markets. Now, let me start out this week a little bit on a different note, not immediately looking at charts, but we have indices closing at yet again new all-time highs. We have the Nikkei being up so much. We have the S&P, which you see on the screen right now, closing again at a new all-time high. We have the Dow up, we have the Nasdaq up, we have the DAX that's also closing or seems to close just below 13,000. The only thing I see and hear people saying is as soon as the market goes higher than they thought it could be, as soon as the market has risen more than they thought could be possible, the more the market rises as people think, or when people think that the fundamental situation doesn't fit, it amazes me that even if at the end of a week when you have the highest price of the week of the year all time, people are still going to sell, and these short-term people always need to go against the prevailing trend, and they from what I see is it's like they let the trend pass by, waiting for that moment when they can short into the trend, knowing that the move they're gonna get is not gonna be as long as the trend, plus you're running a bigger risk of your signal working out and the choppiness of the move itself that you're going to get in that corrective move that you are waiting for to trade, because you think after the market has risen so much it needs to correct and I'm going to be trading that correction. Now, I have, in my 11 years in trading, I've never understood why not just go for the opposite and say, screw the correction, let's go for the trend and let's stay in the trend and with the trend and trade where the herd is going. And if the prices are rising, not most people, but volume and positions are going to be entered and exited and stopped out in the way of the prevailing trend. And when you can spot the breakouts, and that's pretty much just it, you spot the breakout, you manage your risk, you get in and you hold, and it's either going to work out or it's not going to work out. That's why you calculate your risk, and as soon as you notice that you got something that is running, you add into it and increase your gains compared to your loss. And over a year's time, or over a 3-year time period or 5-year time period, and even longer than that, you will definitely have a positive expectancy as you back test a trend trading system. You can see that they are working out pretty well over hundreds of years, actually. Now, there have been tests, and if you're browsing around the podcasts that are available, not just the Michael Covell one, there are many more on trend following that will show you these kind of stats. And I guess we're coming kind of back to what we were talking about the last time we were doing a recap, where we were saying that people can't hold positions for a long period of time. It's very, very difficult to do nothing and to sit and to not have any excitement, to be bored, completely bored to the point where you think, I need to get a hobby next to trading because it's so boring. Now, when you start out trading, it seems to be so exciting. You can make money out of nothing, and you click, and it's all of that profit and all of that loss, and it seems like it's very exciting, especially on days where you have big news coming out and you have events like Brexit or presidential elections and stuff like this. But in the end, it's very, very boring because you do the same thing over and over again. That is the only way to have a positive expectancy, to have a system that you've backtested, that you have faith in, and that you can execute to the most perfect point possible for a trader, for a human being. There will always be emotions and stuff like this, but still, it's the most boring thing in the world, and that's the reason, in my opinion, why people can't follow it. They need excitement, they want to click, they want to see profit at the end of the day, and that makes them feel like they are doing something. But that's not how markets work and how investing and trading works, in my opinion. The bigger gains, and again, we are not when you watch my videos, we're not talking about making a living from trading. We're talking about changing your life. We want to make a fortune doing this, and I'm pretty young still, only into my 30s, and depending on how old you are, you have so much time to accomplish that, and depending on your account size, I think that 10 years, 15 years are a pretty long time to achieve some great stuff. If you are able to execute to the most perfect point that you can do your system. And that's really tough, actually, and we can see this in these markets. I don't see anybody trend following the long term. You have Larry Tantarelli on Twitter. You have Covell on Twitter talking about trend following, even though I haven't seen him trading. And you have Nick Raj or Raj, or I don't know how to pronounce his name. I'm sorry. These guys are long-term trend following, and they will tell you, or in the same fashion that I do, will show you what is going on and what trends you can ride. But you have many, many more people who are doing day trading and educating others in that regard, but very few long-term trend followers. However, that is where the money comes from. Oh yeah, of course, I forgot Asena Wealth, who also does a long-term trend following. A great guy from what I've seen. Now, S&Ps, if you take a look, you have seen this chart so many times. We have been looking at it since November 2016. The breakout occurred down here. You have multiple add-on possibilities in this move. The first one is here, but every fractal that you see is another add-on possibility. As the trend is moving so well, it's easy to say in hindsight, yeah, well, take them all and put in all of your account. Now that's stupid, and that's not what we do here. Getting one or two add-ons is way enough, because our strategy needs to work in trends that are not running so long and so steadily like we see here as well. And therefore we don't want to overdo add-on positions. But the S&P is and has been running into our direction. The momentum is gaining speed again, even though, as I have pointed out in the last recaps as well, you do have your divergence in here. Definitely see divergence, and price is strong. Price is zooming away from the balance zone, which is always a sign for overextended moves or trends, or the nature of the price action. And that last internal leg of the trend that you see here is overextended. If it continues like this, and what you usually get from it is a correction. Now, please also be reminded that even though these trends are running so well, and even though I was saying all that stuff at the beginning here, there will always be the day where the trends end, and nothing lasts forever. Not in life, not in trading, and no trend will last forever. No correction will last forever. And in this regard, these trends in the indices will also not last forever. We are following our system, and we are not putting any theory or any expectations on the market. We are only doing what the back-tested system tells us to do. And we will definitely be long at the top, that is for sure, because we don't know where the top is, and we can only get out after the top has been made. We get our exit signal inside the balance zone, then we get out. That will mean we definitely give back some profits. That was the S&P picture here. Nikkei, so interesting and so much showing us that it wants to move out. The red line here is a chart that I posted on TradingView today. This is a decade-long resistance level. We are closing above it for the week. We are closing at above 21,000, 21,231 is where we're trading right now. We have half an hour left this week for trading. I doubt we'll drop below it right now. We're looking good. We're strong. We have a momentum move. Somebody commented on this chart and said, you have a divergence in here in the momentum oscillator. I think reaching the top of this previous moves high and this decade-long resistance could be the end of this move, and we'll see a correction into here. Now, of course, we always have to wait until the very end and see what is the right scenario? Will it rise further, or will it start to drop at that red line that you see in the chart? Since there's so much momentum in here, since we have an overall time frame that has been breaking out above this fractal and now breaking out above the resistance. Since the resistance has been touched multiple times before, now with momentum, my belief, and this is nothing more than a belief, but the closing price of this week and probably the action of the coming weeks will support that, is that this is a new movement. This is a move that will make a couple thousand points in the Nikkei as we are climbing back up to levels that haven't been seen in decades. This is just an opinion, of course, but by following market structure and by paying attention to where support and resistance is lying, you can really see that the market bottomed out down here. It retested this level, was retested here. Now we have an up move that finishes off right there in the previous fractal area, which is a very strong resistance. It corrects into the balance zone. The momentum oscillator tries to establish momentum to the downside but fails. Then it gives us this insane momentum move here on the monthly. If you look at it on the overall time frame, we have so many huge green closing candles. We have momentum gaining speed into that previous trend direction, and the previous trend direction is the one of the initial move here, established after the market bottomed out. You don't have a lower low in between. So after the market bottoms out, it looks for that previous fractal area with the heaviest resistance. It corrects in there. It does a bigger type of correction, a major correction, shown by the AO below the zero line, and then you get a momentum move into the previous trend direction. And this is why I think this is such a big move. The divergence is here, definitely, but you gotta see that divergence after the initial move and then the momentum that goes to the highest point in the momentum sequence that you will see in the awesome oscillator. You have to have this divergence here at the beginning. It's a little bit tricky to distinguish between the divergence in the beginning and the divergence at the end of a move, since you don't really know when that will be. But when you have studied market structure and you've seen many examples of that, you can be pretty sure, even though you can never be entirely sure. I'm following my experience, I'm following my trading system and the market price, of course, and all of these things say stay long and hold long. And the momentum move in here the last 5 weeks were insane, closing above the resistance now, and we could really be going in here. When we take a look at the German DAX index, we don't see so much momentum in here, but what we do see is a close just below 13,000, and we are running up in the last 5 weeks. We have broken out to new all-time highs, and as I said, we're closing above there. So nothing else to say, just be long, be long and hold it, and find a hobby, so you don't mess with this. For the last market today, we have Euro Yen. Euro Yen, I'm showing you the breakouts here. Overall time frame is up. This week is coming back at the end of it and retracing a little bit from the week's highs. We could see new lows. We could see a touch of the balance zone. We don't know how the market is behaving in this trend, but it still is a trend, and that's why we are long, and that's why we are staying long. When you look at the overall time frame, you have your initial move up, a correction. The low here is higher than this low, which means this is the initial move, which should be continued. You have your breakout right there on the monthly, and it does look pretty good on the monthly, moving to the upside. And let's see if we can hit 140, 150 here. Will be a long-term trade, as everything that we are talking about. So, trend following, again, working out so well. We have 2.5 months to go until the end of the year. We will see where we end up probably seeing a continuation of those trends before sentiment changes in the coming year, and maybe not even right away. Who knows? I don't know. Nobody does. I don't even care. The thing is just that I'm trading the system and I'm telling you, or I'm giving you my opinion on major market trends based on the system that is following the price. And no matter what people are saying and how they feel and what their overbought and oversold indicators tell you or themselves, the price is up and the price is running up, and that's what we care about. That's why we have been long, and that's why we are staying long. Like the video if you did, and post a comment. See you soon.